one of the lowest percentages in ASEAN to invest.
If you're looking at people, the Filipinos and their savings, it's quite low. They're in debt. You might have heard of the term na sinasanla, or they're essentially giving their ATM card or payroll to the loan shark. That would be a big base of Filipinos that are negative and can't even think about investing at all.
That's been something that's been bothering me.
That's hard. That's really hard. I think it's a much more structural issue. He had to become the biggest gangster to get everyone to be scared of him. But of course, if you were an investor, shucks, like, I don't know anything on the ground.
That makes sense. And as a foreign investor, I'm not going to invest when you don't know if your investment is just going to be taken from you. The rug is going to be pulled out from underneath you, right? What does a balanced portfolio look like? Would you advise for people here?
So the three I would look at would be...
On today's episode, we're joined by Enrique Fausto, Chief Financial Architect of IFE Management and one of the country's rising voices in personal finance. You've probably seen him on social media where he shares practical money tips and smart investing advice. In this conversation, we dive into the hard questions about investing in equities in the Philippines. What works, what doesn't, and how Filipinos can really build wealth in today's market. Stay tuned. This is a discussion you won't want to miss. Yeah, so Enrique, I brought you onto the show because I wanted to talk to you about who in the Philippines should be investing.
Everyone should be investing. But I think depends on the life stage. If you're someone who's still, making ends meet, probably should be worried about emergency funds first. But the moment you can breathe a little bit, meaning you're earning a little bit more income, you have some savings, you should already start thinking about investing.
How many people in this country actually really have that mindset?
Based on the stats, the last thing I saw was, I think, about 2 million have stock brokerage accounts.
Really?
Yeah.
Okay, 2 million out of the
like
120 million. So
120
that's,
million. Less than
that's 2%.
Yeah. Roughly 2% or less.
I just did a video recently, and it was only, based on my research, it was about 1.5%.
Mm-hmm. It's possible because the number I gave was just accounts.
Okay.
It doesn't mean that they're actually actively,
Yeah.
investing in it or not. The highest percentages you'll find are the ones where the government required it, meaning required retirement funds, etc. Those are the countries where you probably see a bigger chunk of the population investing in the stock market.
Yeah, like in the US, for example, we have what we call a 401k plan.
Yeah.
So basically, your company will set aside, basically whatever you contribute, your company will match.
Yeah.
And that fund goes into, equities investment for your retirement, and this gets accumulated tax-free. So the government is also in support of this. So the government supports this program by making it tax exempt, and then the companies that you work for support it by matching your contribution. So it's almost like a no-brainer. You're kind of like, it's kind of stupid not to do it.
There was actually an attempt of something like that here, but it's voluntary. I think that's why it doesn't work. I don't know if you've heard of the PERA.
No. What is the PERA?
Personal Equity in Retirement Account. So it's been around for, I think, almost 10 years already. And it's voluntary. And the issue is it's supposed to give you certain tax benefits. Like you can put, it's a very small amount though, maximum 200,000 a year for Filipinos to put into this PERA account. And in it, the amount of money you put in should be earning tax-free.
Right. Okay.
So
maximum 200,000 a year.
Per year.
That's pretty good.
Yeah. So at least for a lot of people, that's already a pretty big thing. But when you looked at the numbers, it was less than $1 million. I think
but the companies don't contribute to it, though.
They could if they wanted to, but no one's really doing it. And for the employees, let's say if I looked into it myself, it was a bit difficult to justify since the only tax incentive, for example, I put money in the stock market, would be it will not have that stock transaction tax, which is now 0.1% on every sale. So 0.1% if I sell the stock. That's the only thing I'm really getting savings from, and the 10% dividend tax.
But I want to get back to really kind of understanding, who's investing in the Philippines? Like, who's really investing in equities and fixed income here? Who should be, or who's thinking about it? And, who has the discretionary income to do this, right? Obviously, I think the Philippines is coming close to the lower middle income class now. and so people's income are growing in this country.
Yeah.
But I think I saw somewhere on the research, I researched recently, out of all our ASEAN partners, we are the least country to invest in equities and fixed income. Like, I think we're one of the lowest percentages in ASEAN to invest period.
Yeah. One of the reasons would be, I think, even just the savings before you even get to investing. If you're looking at people, the Filipinos and their savings, it's quite low.
Uh-huh.
A lot of people, especially if you're talking more in the lower income classes, are not even simply base zero. They're actually like a negative net worth.
Okay,
They're
in debt.
They're in debt. You might have heard of the term na sinasanla, or they're essentially giving their ATM card, their payroll, to the loan shark.
Right, yeah.
So that would be a big base of Filipinos that are negative and can't even think about investing at all.
Do you ever even address that? Because that's been something that's been bothering me.
That's hard. That's really hard. I think it's a much more structural issue.
Yeah.
And it would take a lot more like government, private, even civic groups to come together to do something about it.
I had my team look for a van, right, a car, and they came back to me and they told me the monthly payment. I'm like, oh, wait a moment, what's the interest rate? And they said 3%. I'm like, 3% per year? No, 3% per month.
Per month.
So that's compounded, right? So 3% a month isn't 36% at the end. You're paying almost like 40 something, 50%. So you're essentially paying the value of your car, almost half the value of your car every year.
Yeah.
In your monthly payments.
Exactly.
And wait, everyone is on a monthly payment on a car. Why? How is this even legal?
For most Filipinos, I think there's definitely a lack of the financial literacy angle. It's not required to, for example, show the interest rates in the same uniform way. Like they say 3%, but is that annual? Is that monthly? So it is currently legal.
It's legal.
Yeah.
How come the government doesn't stop this? Because how is anyone going to pay their car off? You're paying half the value of the car every year in interest.
Yeah.
Why don't you just save up for a year and buy the car outright?
Yeah, but there's I guess you could say that could be a lack of financial literacy, because if people knew, they would demand. And it's possible that since they just don't know, or you can argue that Filipinos are more on the emotional side of things. Mm-hmm. It's actually, I think, in the culture to not talk about money too much.
It's almost like this is like your arch nemesis on what you guys try to do, which is you're trying to promote investing, and everyone's in these terrible debt vehicles.
Yeah,
they're just like all and everywhere everyone I talk to, business loans, car loans, whatnot, like 5-6 loans, whatnot. It's just like, what's the interest rate? And you're like, wait, how much is this? Like, per day, per week, per day, per month? And it's like, whoa, do you guys understand how much this really comes out to be? How do you gain wealth? And the whole thing with investing is to build wealth, right?
Yeah.
You can't be building wealth if you're just paying massive amount of interest rates.
And you'd be surprised. It's not just lower income. Even those in the middle, even close to the higher income, don't fully understand these concepts. So I think stage one, just the first step, is just being more open to talk about money, understanding money, and for it not to be a taboo topic. Like, I noticed with a lot of families, even the wealthier ones, there's a saying now, like, don't talk about money because magmumukha kang pera, which means you look like money.
Oh. So you don't want to be a target. Is that why you don't talk about money?
So in families, if someone wants to talk about money, that's a typical thing they would tell them.
Does it sound like you're bragging if you're talking about money?
Possibly.
Okay.
Yeah.
I find that interesting because, I also live in Portugal, and it's really rude to talk about business and money because, in the U.S. we do it a lot, right?
Yeah.
And it's like everyone talks about how much they make, and it's like, it's almost like you have to prove that point first. If people always ask you, one of the first questions they ask you in the States is like, what do you do for a living? Mm-hmm, mm-hmm. It's because they're sizing you up.
That's
It's like,
true.
should I be
That's
talking
true.
to you? Because if you don't make enough money, I don't want to talk to you.
Are you important enough?
Yeah. So that's a common question.
Yeah.
And in Portugal, that would be considered rude, right? And we don't talk. But then Portuguese, they don't have a very strong culture of entrepreneurship and risk taking,
Got
right? Here, I find that people do boast about their status, but the very wealthy people are very hush hush
Yeah.
about this stuff.
Yeah. There's a reason why, at least in the Philippines, if you look at the Forbes billionaires list,
Yeah.
like the richest, they happen to be typically not Filipino. Chinese Filipino, maybe some with Spanish descent because
Yeah.
they inherited lands from
Right.
during that time where we were colonized. So I would argue maybe not in the Filipino DNA to be very entrepreneurial.
Yeah.
So there's a tendency to be a bit more on the safe side. And with all of these things that you hear, like in the Philippines, there's a lot of scams that go around.
Yeah.
There's a lot of worry that I might get scammed.
Right.
Like you'd be surprised when people like talk to me and they're looking to invest and they talk about, oh, we're going to use this platform. It's a long established player, etc. It's still a question. How do I know that this is, not that I think you're
Yeah.
a scammer, but how do I know that this is not a scam?
Right.
Because it's so prolific.
Yeah.
So I think that definitely adds to it. So imagine people who are not truly educated about it.
Yeah.
They can't talk about it amongst family and friends. It's a little taboo. And then when they start to venture out, so many people get scammed.
Right.
So you're left with, I'll just save instead.
Right. So talking about money is like the elephant in the room.
Yeah.
And that's do you know where that comes from?
I can only take a guess,
Uh-huh.
right? If you were to look at the Philippines as the colonized people, the ones who controlled the wealth were the colonizers.
Right.
In the same way the Spanish didn't want to teach the Filipinos how to speak Spanish,
yes.
they probably didn't want to teach them the language of money and business.
That makes sense.
So the aspiration of a typical Filipino family was for you to be a trained professional, a doctor, a lawyer, maybe a company executive. And who are the ones who took the opportunities in business? The ones who had no choice,
Right.
mostly the Chinese.
Yes.
Because they didn't have the language, they didn't have the education to take these roles that were the safer bets at the time. So they had no choice but to do business. And right now, if you look at the list, it's majority.
So your biggest segment of customers that are investing are Chinese descent or Spanish descent. What about the Filipinos? How is this changing? What's happening now?
Yeah.
Are there people kind of educating and changing? I know there are a lot of content creators that I've met
Yeah.
that are trying to
Break
teach
that.
financial literacy.
Yeah, I'm really hopeful with this new younger generation because our parents' generation, a lot of the stock market investments available were actually, not the most. They were more on the mining and kind of a gambling type. But nowadays, you have more companies that are legitimate that are listing on the stock exchange and are worth investing in. And what I like about the younger generation now is there seems to be much more openness to it. When we first launched a video on personal finance, it was actually my younger brother's idea. It was in the pandemic. He was a mixed VJ, if you're familiar with like an MTV music channel, and it's part of ABS. So my younger brother lost his job when ABS-CBN lost their franchise. He's one of those.
Right.
So he had this crazy idea to tell me, hey, there's this TikTok thing. Maybe you can talk about personal finance there. I initially was skeptical because I thought, who's going to listen to personal finance on like a TikTok?
I said the same thing about real
Yeah.
estate.
And then now, like the TikTok channel has over 100,000 followers. I'm like,
Nice.
wow, like, are you serious? Because I would have been happy with just 1,000 because because I thought it was a niche topic that not a lot of people are interested in. But with waves and waves of comments, follows, people sharing it across Viber groups, they've used the content as a way to spark the conversation that was before awkward to start.
Nice.
Yeah.
So they're hungry for this.
There
information.
is a hunger for it.
So the awareness is already there.
I think it's getting there. Like the younger generation's much more open to it. They're actually trying out, maybe opening these online accounts, etc. Some good, some, maybe not the best avenues.
Yeah,
but
yeah.
I think there is an openness and an attempt
I think the hardest thing, and even me, I was a late bloomer. I was a finance major in college, so I always knew about investing, and I wanted to be an investment banker.
Yeah.
But it took me a long time before I ever made my first investment. My first investment wasn't until I was the age of 39. It was real estate here in the Philippines.
Yeah.
But then, I kind of waited till, I was really making money before I started investing. I had a lot of discretionary income before I started investing. But in hindsight, I would thought about it. And I was like, God, I always kick myself, and I wish I started way before, because I might be triple my net worth today from that, Yeah. But everything in hindsight, right? 2020 in hindsight.
It's easy.
But, so I'm trying to teach the mistakes that I've made.
Yeah.
I think, I don't know if you've made any mistakes, but that's kind of like how I go about it. How much would you start investing? Like, how much would you start investing in equities? First of all, let's talk about the type of investments that are best to start at. Because, I talk a lot about real estate, and a lot of people who are not wealthy yet, you're not going to be able to get into real estate.
Yeah.
It's very difficult.
Doesn't make sense.
Right? And the barrier to entry is too high on a down payment, and it's too big of a risk.
Yeah.
It's best to start in a bite-sized investment. And I would think two things: crypto and equities are your best bet for Filipinos. I would stay away from crypto, because I would stay away from 99% of crypto out there, because it's super volatile, super scammy. There's only one thing I would invest in is Bitcoin and maybe consider Ethereum, but that's about it, right? But I would only consider that because you can invest a smaller amount. And I think the hardest part for me was making my first investment.
Got it.
Once you get the first investment, then your whole mindset starts to
Changes.
change.
Yeah. I think the issue with a lot of Filipinos is there was no role model that looked like them, that did that, or succeeded in that. So I could say I'm very privileged. My parents did grow up in investments. I saw the role model.
Yeah.
I was a kid. They got me in investing, and it worked.
Yeah.
It's been working very well for us. So I think for Filipinos who are starting out, the first thing they have to try is something that's saving, but I would say like a next level investing, but safe first. What do I mean by this? So obviously you have your traditional savings accounts. Maybe you can try these online banks that give these time deposits that earn them a little bit more, just as a starting point. Because I think for people who have zero experience, they need to know that, okay, I'll put my money here, I have to wait, and then it can grow.
Right.
That's the first thing. Because if they dive right into the most risky type investments, they get burned, they never come back. And the only role models or mental models they have is of their parents who maybe bought a piece of property a few decades ago. So they're like, I'll just stick to that. Right? So I think for a lot of Filipinos, we start off with just the base level, like a time deposit, or what they call like a money market fund, which is essentially just like a bunch of people putting their money and putting in safe stuff like time deposits.
I'm curious to think if you think I made the wrong move or not. So when I was younger, I was determined to be an entrepreneur. Like I was determined to be a successful businessman. So I didn't invest in any equities, even though I knew about it, or any real estate.
Got it.
I wanted to put all my investment into myself so that I can build that big success. And I talked to Chinky Tan too, and he says, don't ever invest in anything you don't understand. And I kind of subscribe to that.
Yeah.
And, in my early days, I was just trying to learn anything about business to be successful. I never really took the time to learn about equities, and still to this day, I probably will invest in a fund or an ETF. I won't actually, because I don't know enough about this particular company. Right?
Got it.
So unless I actually take the time to study those company prospectus and profiles and things like that, I don't feel like I should be investing in them. Okay. That's kind of been my way of thinking. Is that the wrong way of thinking?
If you're looking from an entrepreneur perspective, I think it makes sense to invest, maybe not directly in stocks, maybe more like a fund that invests broadly, like an index. In the Philippines, that's the top 30 companies. And the reason why I think that's a good way to start is because if you want to be a businessman, it helps to learn from the ones who've done it pretty well over here.
Right.
And if you have skin in the game and you have money even just in an index fund, and you see the ups and downs, and you learn about why it went up or why it went down, that would be an education that could help even in entrepreneurship, or even if you don't decide to be an entrepreneur, you want to be an employee, you want to help improve the business that you're working in, it would be a great education to have. So even if, let's say, your goal is to invest in yourself, which I think makes sense, it doesn't hurt to take 5-10% of the chips off the table and put it in a stock fund.
Let's just back up real quick and just kind of give context of like why, when we talk about investments, we're really talking about building your wealth through. A lot of people don't understand this, right? Because people look at it from a cash flow perspective.
Yeah.
Money in and money out. And that's how I'm going to build my wealth. More money in, less money out. I'm going to build my wealth. But when we talk about investment, what is the lesson that we need to teach people about why this is building wealth? There's the equity part of it, right?
Yeah.
How do you explain this to the average Filipino who doesn't understand much about investment?
The simple way to put it is it's ownership. Right? It's the difference of when you own something and that thing goes up in value or gives you a cash flow. That's something that you didn't have to spend a single hour or minute working on. So just that concept of creating that, they call it passive income. At least now, I think it's becoming a bit more commonplace to know the term, which is great. But I think the next step is, sure, everyone wants to someday retire and not work and have these investments working for them. But I think the next step is really understanding, how do I actually take that first step and start learning how this thing works?
I always think of it as this, I always say you cannot become wealthy. You will never be wealthy unless you own assets, right?
Yeah.
Because if you don't own assets, you're basically mostly trading your time for money.
Yeah.
And you're always going to be limited by time.
Yep.
Right? And so the more assets that you own, and assets, I always kind of think of I always think about my properties like my employees. So they're like my employees. They're working for me.
Yeah.
When I'm sleeping, they're working for me.
Yeah.
And they don't take a rest. So they're making money 24/7. I think that's kind of like the way I look at it.
Yeah.
And so it's better because it's better than having employees, because employees get sick. They quit on you. They steal from you sometimes. But my house doesn't steal from me.
Got it. So, to use or push the analogy further, the reason why I like personally investing in the stock market or equities is, with property, it's great, right? You can feel, you can touch the thing.
Yeah.
But when I think about where is money made, or who's really good at making money, it's the entrepreneurs.
Right.
So you can open your own business. Sure, it's a high risk. It may pay off, etc. Why not put a little bit in the people who have proven themselves to be very good money-making entrepreneurs? So you not only have one piece of property, you have a whole CEO, C-suite, a bunch of employees, all doing their best to make more money for you.
Right. That's if you trust the system.
That's true.
I've invested in startup companies before. I think I invested like 2 or 3. And, I didn't invest that much. I think they were like, $30,000 US dollars for one, $50,000 US dollar for one, and another $10,000. But they've all completely failed.
Yeah.
And, I don't even hear back from the founder.
Yeah.
I don't hear anything back, and I'm
Ghosted
just like
you.
write it off. And I'm just like, you know what? I'm better off putting that money in myself.
Yeah.
Just invest in myself. How do I trust that you are gonna do what you say you're gonna do? It's risky.
Yes.
There's a risk aspect to this.
Definitely.
And how do you explain the risk aspect of
Yeah.
investing to someone who doesn't understand?
I love the example from this book called Psychology of Money, Morgan Housel. And he said, people know the difference of going to a cheap public park, right? It's free, maybe there's a slide. And when you go to Disneyland, you have to pay a ticket price to get in. In investing, it's the same thing. If you want just the safe stuff, you're just settling for the public park. If you want a Disneyland life, you have to be willing to pay the ticket price. And in investing, the ticket price is the risk, is the volatility, where it will go up and down. It won't always work. You won't know exactly what's going to happen in the future. All of these unknowns. And if you're okay with sitting with that and you have a right strategy in place, then you get to enjoy Disneyland.
Yeah, but that doesn't sum up risk. That
Got it.
tells you the potential upside of it. What you're explaining is a potential upside. But there is something called risk versus reward. Okay? So what people understand that the more money you want to make, most likely there will be assigned a higher risk to it. It's basic supply and demand. If you can make a lot of money from something with very low risk, everybody will want to invest in it. And therefore that will diminish the returns. Your costs would be higher. There's a concept that people need to understand. There is a risk to this. So they're going to be like, oh, and my mom and my dad are old school, and they're probably like the typical Filipinos that you talk to. They think it's gambling. They think investing in equities in the stock market is gambling. And to some extent, it's partially true.
It's a fine line.
But there is something else to it. And how do you break that down? How do you make them understand this?
Got it. Gambling for me is you're throwing money at something you don't understand. You have no idea how the risk-return trade-off looks like. And typically, when you're gambling, the risk is so high that you lose everything. The chance of return is so low. So it's a form of entertainment. You're probably going to lose money.
I wasn't in the gambling industry, I'll tell you.
Yeah.
Right? Your odds are against you. It's already predetermined.
Yeah.
You're already going into it knowing that the percentages of you winning is less than 50-50.
Got it. So the investor, on the flip side, is the one that's knowledgeable of the fact that you need to take risk to get a higher amount of return. So what's the appropriate mix for that? Gambling, you're just throwing it out there and just hoping something works, or right. I hope I win the lottery. But when you're investing, you're actually understanding that, hey, where is the return going to come from? Is this a risk that is reasonable given the alternatives? And has it been proven to work before to a certain extent? So to go back to that analogy with the startups and these people that you invest in, I think one of the great things to understand with investing is you have to come in with a lot of humility.
Right.
Because if you look at the guys who invest in, let's say, venture capital, etc., the way they do it is they take like 100 or 1,000 different bets. Right?
Yes.
Because they're humble enough to know that 99% won't work.
Yes, thank you for that. I didn't actually finish my story on that.
Yeah.
The reason why I stopped doing it was because I knew I needed to go to bat at least. So yes, I lost those investments, but it wasn't because it wasn't that it wasn't worthwhile. I had to go to bat at least 10 times to get one win. And that one win, the return could be so big that it pays for all the loss.
Yeah.
And I wish we could draw a chart of volatility and draw a chart of volatility over time. And typically speaking, with equities, with real estate, generally speaking, you can take an overall, what do you call it? There's terms for this, but we'll just take the overall CAGR or average, right?
Average growth. Yeah.
The average growth. And if you factor time into it, overall, on average, over a long span of 5 years or 10 years, you can more or less expect this growth of return. So let's say it's like 10% year over year. That 10%, if you draw that chart, is going to be sometimes negative 20, that's positive 10, negative 15, positive 20. And overall, if you weight it out enough, this chart just goes from here to here, and it averages 10% over year. Yeah. Right? And that's what you're banking on.
Exactly.
That's the risk versus reward.
Yeah.
Right? How much for someone who's starting off, how much should they be investing?
In peso terms?
Yeah, so let's talk about the average, what's the average salary of, a management level?
probably 50 and up.
Okay.
Depends how
much
high
should
or
they
how
be
low.
investing?
We always give the recommendation of 20% of your salary. So if we're talking about 50,000 pesos a month, roughly around 20% of that is around 10K. Right? So 10,000 pesos a month goes into investing. Is that life-changing? Probably not right now, but over time it could be.
Right. So 10,000 over time. Do you have an example off your head? If you invest 10,000 over time, multiplied by the return over a span of 10 years, what could that look like?
I don't have it on top of my head. I think we'll
Okay.
need to run a number there.
Okay.
But the thing I noticed when we were doing the math, you may have heard of the term the 4% rule for retirement.
Yeah. What
Yeah.
is that?
So-
no, not here. No. What
Not
is
here.
that?
Okay, so people want to have passive income. And what we found out is for it to be sustainable over, let's say, a 30-year retirement, you should withdraw roughly around 4% of your portfolio every year. At least that's what the studies show,
Okay.
like William Bengen and all these
Gotcha.
guys. So if you have a portfolio, let's say with 100,000 pesos, you can withdraw 4,000 pesos a year and live off of that,
Right.
over a 30-year retirement.
Right.
And when you ran the numbers, if you do 20% savings rate, you can get to that point at roughly around 60 plus, 63, 65. If you want to retire when you're 50, that 20%, you have to gradually bring that up 1 percentage point per year to 50% savings rate.
Uh-huh.
And then you can retire earlier.
Okay.
Now, what I just outlined was what my dad did.
Okay.
Essentially, 20% savings rate. As his income increased every year, he was, let's say he earns 5% more. The 4% he'll spend, the additional 1% he saves a little bit more. So his savings rate goes up from 20 to 21 to 22 to 23 until it hit close to 50%. And then he could retire off a portfolio, and that's what he's been doing for the
Right.
past decade. He's
Yeah.
just kind of enjoying life.
I was aiming for early retirement, and the way I defined it was this. What was the amount of money I needed every year? At the time I said I need to make 100,000 US dollars a year. And I said, okay, a typical return, a very achievable return on my portfolio of assets would be 5%. So I said to myself, 5%, you need $2 million in assets
Yeah.
to be able to retire to make $100,000 a year, which means that if I reach $2 million of asset, I just hold on to the asset, earn off the dividends, rental income, whatever it is, that $100,000 would pay for my living expense. That $2 million would stay constant or continue to grow in valuation. And say if in 10, 20 years, it's still there. It
Yeah.
never goes away.
Yeah.
So I have a constant income for the rest of my life.
I'd like to add something. The simplified way to go about it, that 4% rule, if you just do the math, they would simplify it by calling it the rule of 300, which means, let's say I'm someone who, I like using the term best life budget. It's the kind of lifestyle I'll enjoy. If my best life budget is, let's say, 100,000 pesos per month, I just have to multiply that number by 300. I'll get 30 million. That's my 4%. So whatever number that you want to live off of on a monthly basis, just multiply it by 300, and you already get the number that you need to live off comfortably. Yeah.
Gotcha. That's an easier way to think about
So
it.
300, I think, is a simpler way for a lot of people. So
Yeah,
just use
yeah.
that.
So your monthly budget times 300.
That's it.
That's the amount of assets you need.
That
So
should be invested.
That's
and
what you should
earning
be
you something.
targeting.
Yeah.
You should write that up on your board
Yep.
and figure out every month or every week how much you can contribute to that amount.
Exactly.
Right?
Exactly. Yeah.
That's the way to think about it. Yeah, that's great. That's why this is so important. But let me ask you something. So I don't believe in just investing in equities, and I don't believe in just investing in real estate or crypto. I believe in having a balanced portfolio. Some people don't understand this concept. What do you guys preach?
So we believe in the term is diversification.
Right.
Essentially, putting your eggs in different baskets.
Why do we diversify?
In investing, they have this concept, there's no such thing as a free lunch. Right? Like you can't get more returns without increasing your risk at the exact same rate. Diversification, or putting your eggs in different assets, is the one only free lunch where you can actually get a pretty decent return for less risk than if you just went all out in one thing.
Mm-hmm.
So you actually got more return for less risk if you do that strategy. So it's the only thing where you just do it and then you get the free return. So just get it.
So the way I like to think about diversification is I always think about a zombie apocalypse.
Okay.
You cannot predict what's going to happen in this world. You cannot predict if we're going to go into World War III. You cannot predict if there's going to be a COVID-2 or there's going to be a damn zombie apocalypse. You don't know if we're going to go through famine, right?
Yeah.
So how do you always plan ahead and protect yourself, right? And that's, to me, that's through diversification.
Exactly.
Right?
Yeah.
That's how I think about it. What does that mean? Well, let's say the economy is doing well, your equity is going well. What happens when there is a war? What happens if we go in a bear cycle? Our economy goes through a Great Depression. What's gonna keep you afloat? So when the economy goes up, that's easy. Everyone's riding high.
Yeah.
When the economy goes down, all of a sudden your gold is worth more. Maybe fixed income does better, right? You don't know. It depends on the situation.
Depends on who's
Right?
the one who issued the fixed income issue.
So for some crazy reason, this was completely unpredictable. COVID happened. We thought the whole market was going to crash.
Yeah.
What happened? Everything went up through the roof. And then, why? Because every government around the world started turning on the printing press and printing money out of thin air. And so if you weren't invested, you were the one getting screwed.
Yeah.
Most people don't understand that.
Unfortunately, yeah.
So that's the thing. Like in that particular case, when COVID happens, we were all of our equities or real estate values started like doubling.
Yeah.
Right? It's in the States especially. And then you know what the hedge was at the time? Everyone was buying land. I was looking for land. And two of the biggest tech founders like Bill Gates and Jeff Bezos became the biggest landholder in America during that time. So they were diversifying from their tech equities into land. And it made sense because if everything fell apart, what was the ultimate hedge? It wasn't Bitcoin or gold. You couldn't eat if everything fell apart and there was a food shortage, land was the most important thing, right? So I always think of diversification in terms of the doomsday scenario.
Got it.
Right? Because if your whole equity portfolio crashes, you have this portfolio that lifts you up. This, your crypto portfolio, your gold portfolio, whatnot. But in that particular case with COVID, like the worst thing to have was cash.
Yeah, exactly.
Right? Because that means your money was just debased.
Essentially.
Essentially.
Not the short-term interest rates on the cash didn't really make any money for you, and you missed out. Probably a once in a decade.
You didn't want to be in fixed income during that time either.
Yeah, not even.
Because what happened was the government started lowering their interest rates like crazy because they were printing money. That's how they print money, is just lower their interest rates.
But the thing about bonds, though, is if the interest rates go down and you hold bonds from before, you still get the high yield.
Yeah, okay.
So if you sold it at that time, you would have actually made extra money.
Ah, yeah. But
So
you didn't want to
holding
buy.
bonds-
You didn't want to buy during that time.
Yeah, you'd wanna sell.
Yeah.
Or just hold.
Right.
Either way, you're still winning. You're
Right.
still up.
Yeah. So, anyways, what is the proportion of what does a balanced portfolio look like? Would you advise for people here?
Got it.
Between real estate, equities, whatnot.
Okay. So the three I would look at would be equities, fixed income. So that's essentially, you lend to the government, you lend to a company, they give you back interest payments. And if we're talking about real estate, that could be the third. Probably where you live. If you're really into it, maybe an investment property or two. Each person's a little bit different, but roughly, a lot of people tend to do roughly a third of each.
Okay.
1/3 in equities or stocks, 1/3 in fixed income, just to make sure if you're liquid, you need cash for something.
Do
you have
people
an
know what
opportunity.
fixed income means? Do they
Not so
do
much.
they understand what fixed income is?
Probably not.
Do you want to explain that
Sure.
to give context?
Sure. So fixed income essentially is a type of investment that where you lend the money and then they pay you back a little extra interest, and then they give you your money back.
Right.
So essentially you're the bank, you're lending.
It in a nutshell, it's you can think of it like interest, but it's paid to you in yields.
Yep.
Right.
Exactly.
I don't know how to explain yields, but but think about it as like lending money and getting interest on that money.
Yeah.
What's the difference with equities?
With equities, you own the asset, you own the business.
Yeah.
So instead of a fixed, that's why it's called fixed income, a fixed interest rate, let's say it's, right now, 10-year government bond. So if you lend to the government in the Philippines for 10 years, it grosses 6, nets roughly around 5% after tax.
So by having ownership, you can gain in two ways. The value of the stock can go up, or you can get a dividend, which is a dividend means that when the company makes profit, it pays a percentage of that profit back to the shareholders.
Yeah. So essentially, it's not a fixed thing, unlike the fixed income where you're assured of the number you're going to get. But since you're a stockholder or an equity holder, or essentially you own the business, then you get possibly more upside, but also more downside. Goes both ways.
So I want to have a little discussion with you,
Sure.
maybe a little bit of a debate. What's better, equities or real estate as an investment?
I think for me, equities.
Tell me why.
Within the world of equities, you have real estate, you have banking, you have consumer, you have all these places. And I'm sure you've seen that there are times where some sectors do better than others. So if you were all in real estate and the real estate market is down, what are you going to do?
Right.
Right? What's interesting with equities is you can actually be in different sectors all at once. And if you're in the right strategy, so we're big investors of low-cost index funds, you're in all sectors. So when a sector goes out of favor and gets replaced by someone new, suddenly you're in both. Perfect example would be COVID.
Right.
So in the Philippine stock market during COVID, for example, people weren't going to Jollibee anymore, right? Jollibee stock price tanked.
Right.
One of the few stocks that recovered very quickly was Globe, PLDT, even Converge, because suddenly everyone's working from home, school from home, internet usage skyrockets. So why not be in a place where you can get both, or essentially all?
Yeah, I don't disagree with you. I will give you 1 point for real estate investments because of liquidity. What you're talking about is liquidity. It's easier to trade in and out of whatever assets you want.
Yeah.
It's a simple push of a button. Whereas real estate, we're going through. You right now, if you're trying to sell your real estate, you might be holding on to it for a few years. Yeah. And so that process is expensive. It's long. It's not easily transferable. But I would also say that overall, the risk profile of real estate is smaller because of that issue. It's not as liquid. And overall, I don't know about the Philippines because there's no clear data around real estate in the Philippines. But in the States, overall, it's a less riskier investment. So, in other words, your chances of success with your money is higher in real estate in the States than it is in investments in equity. There's a bigger risk associated to equities.
Which is also why if you look at just, let's say, the S&P 500 and the top 500 stocks in the US, I don't know which home price index you want to use. I looked at the one by Case-Shiller, Home Price Index. The S&P 500 has done much better. Also because there's more risk there than buying a home.
Right.
And the thing I like about equities versus, let's say, real estate investing is it's very clear how much money you really made or lost. Typically, people tell you, I bought this property, 100,000 per square. It's now 200,000 per square. Then I ask them, how about the furnishing cost? How about the taxes? How about the insurance? How about the vacancies? I actually had this client. They bought a Rockwell property.
Yeah.
Nice property. Doubled in price over 10 years.
Yeah.
Great story. They incorporated because they were two siblings. They had to furnish it. They weren't able to rent it out completely the entire term. It netted out over 10 years, 3%.
Yeah, I believe that.
For all the effort.
Right.
For all the effort.
When you factor in your taxes, your
Yeah.
insurance, your utilities,
Yeah, everything.
your property management.
The homeowners dues keep going up, and
Yeah.
you can't control that, right?
Actually, no, you're right. The cash flow in real estate is not very much. The return isn't crazy a lot in terms of cash flow.
Mm-hmm.
And if you're talking about the net of 3%, where you factoring the appreciation of
Everything.
the property too,
Yeah.
and the cash flow, there is one more factor in real estate. In most countries that we get, there's a huge tax advantage around real estate,
Yeah.
but not here.
No,
Not
really.
as much here.
Not really.
There's actually more of a tax advantage in equities here,
Yes.
which is something I wanted to dive deeper into with you, because I'm always looking for tax loss harvesting. I'm always optimizing my taxes for the next year.
Got it.
And, you know, real estate has been my biggest strategy in terms of tax savings. Believe it or not, I don't get to write off my real estate in the Philippines here in the Philippines, but I write off my properties in the Philippines in my U.S. IRS returns.
Oh, wow. Okay.
So I actually am
So
able to,
they acknowledge it.
yes, because the U.S. gets to tax me no matter where I go in the world. So they tax me on my income and all my capital gains.
Got it.
So if they're going to tax me on the capital gains of my condos here, if I sell it, they better let me write it off, right?
Yeah.
They can't justify in taxing me unless I can write off their expenses.
Got it.
So I actually I actually am able to accumulate losses from my properties here in the Philippines and anywhere in the world, so that my primary income is offset from my
Yeah.
real estate losses. Wow, right? Like
Yeah.
that's amazing. And a lot of people don't understand this strategy. But in the Philippines, I can't do that. And a lot of Filipinos can't utilize that strategy,
Exactly.
right? And so that's unfortunate. So I wonder why real estate, there's so much more money poured in real estate in the Philippines than there is financial investments like equities and fixed income.
Well, there's definitely a lot of reasons for that.
Let's talk about that.
Why aren't
Because-
people investing?
Yeah, because I've been asking everyone. I've asked David Lee Chu. I've asked a bunch of guys who are into equities here. I asked them this one question. I said, well, you know what? The Philippines is boasting a 6% return over the last decade. Oh,
GDP
the Philippines
growth.
has boasted a 6% GDP growth over the last decade. And you look at companies like Jollibee, Ayala, whatnot, SM, they've been seeing incredible growth in
Their earnings,
earnings.
the profits. Yeah.
But then I look at the PSE over the last decade, the PSEI, the Philippine Stock Exchange Index, and it's basically been trading sideways for the last decade. Hasn't grown.
Yeah.
So what's happening there?
The three reasons. The foreigners, the foreign institutions have been selling nonstop over the past 10 years.
Why?
There are governance issues, I would say. So you might be wondering, why are foreigners selling so much? So for context, the Philippines, and stock trading in particular, half of all the trades are done by foreigners, specifically foreign institutions. The other half is mixed with local institutions and the retail investors. So it's a big market. So if one side is selling, the other side can only do so much to keep it afloat.
But I can understand that, but like as a foreign investor, if the value is there, if the price earning ratios of these companies at a low valuation and the company keeps growing, there's value in that.
Yeah.
Why would I pull out?
If I were a foreign fund manager and I'd have an emerging markets or an Asia fund, the Philippines is now less than 1%. So for me to even bother with looking at the market, putting money in there has to be a compelling reason.
You mean it's less than 1% of their overall bank
Their overall portfolio.
And you're talking about institutional investors. You're
Yes.
not talking about foreign
No.
investors like me. You're
No,
talking
no,
about
no.
you're talking about foreign banks. Like you're
Yes.
talking about SoftBank. You're talking about
like BlackRock,
Yeah.
these Vanguard,
Right.
these big guys. For them to bother with the market, it has to have a compelling story. And you can argue that if you pulled out the chart of the Philippine Stock Exchange Index, let's say the past 20 years, we had a good run from around 2010 to 2016 during the Pino administration. His push was very clear. let's make things less corrupt, right? Let's increase the tax efficiency so your revenue went up for the government. But since they were really focused on spending cleanly, they didn't spend so much, which pissed off a lot of people. But from an investor perspective, wow, this country is earning more and spending less. That means they are fiscally more responsible. So we were upgraded to investment grade. People were pouring in. People were hopeful that, okay, maybe the corruption issue is going to be solved. So then we can invest in places like the Philippines.
And then what happened?
The next administration, the Ted administration, actually had a lot of good things going for it from an investor perspective. He was pushing for build,
Right,
lots of
I remember
infrastructure.
that, yeah.
Let's go outside of Metro Manila. Those are all great things. There was tax reform. The train law was great. I was an employee then, and I actually had my income, my net take-home pay go up because I was within the middle, lower to middle income class. The richest ones, or the highest income earners, were the ones who were taxed more. All great things, right? But then, there were a couple of things that the administration did that was not exactly business friendly.
Such as?
Such as, for example, ABS-CBN, the largest media conglomerate in the Philippines, lost their franchise. Some people say, I'm not going to say, some people say it's because something about the elections, I guess they didn't work well together.
Okay.
So, a prominent family, like the Lopezes of the ABS-CBN, or even the Ayalas, they actually had to sell out or lose control over one of their businesses, Manila Water, the water utility. And it seemed like it because they
sold
weren't
out to
friends.
the government. The government took it over,
So
or what?
essentially, they had to give up control and sell to another businessman who was a bit more friendly
I see.
to the government, particularly Ricky Razon. So
I see.
he took over the
Wow.
control. So if very established but generational
That is very
businesses,
gangster.
right? And that's how he did it in Davao, because he had to become the biggest gangster to get everyone to be scared of him. But of course, if you were an investor, shucks, like, I don't know anything on the ground. I don't know if,
Right.
my investment will suddenly become the enemy of.
That makes sense. And as a foreign investor, I'm not going to invest in the country when you don't know if your investment is just going to be taken from you. The rug is going to be pulled out from underneath you, right? I remember we were running ZipMatch and we were raising institutional VC money. We had already raised about $5.5 million. And then when Duterte became president, funding dried up for us. I mean, it wasn't just a coincidence. I think it was very difficult to get funding at that time.
And you can also argue that there was a pivot from US to more China.
Yeah.
And you can add in the last piece of the puzzle, which was when the pandemic hit. The Philippines had one of the longest lockdowns in the world. The approach for handling COVID was very military-based. Lots of checkpoints, more lockdowns, strict rules, versus being a more health-driven initiative. So some economists would argue we took longer than a lot of other economies to get out of that and to go back to our growth path because of how the pandemic was handled. So a couple of things would dent the foreign investor confidence. So it would take some time before they'd want to go back.
So you're saying these foreign investors, despite value, they're pulling out because they just don't trust the political structure here. It's the change of
the policies.
It's changing the policies, the political shifts that are moving money back and forth.
Yes, because if you think about the Philippines in the scheme of a foreign, institutional fund manager. It's a lot of work for a 1% or a less than 1% of my total portfolio. So the only way I'm gonna take time to do that is if it's worth it. If there's something truly compelling. Because you can argue, like the Philippines has a great demographic, right? Median age is somewhere around 25.
Yeah.
People are earning money, buying homes, etc. All that's good stuff. But if the governance structure around it is something that's a bit more difficult to deal with, maybe I'll just stick to safer investments. Because going into the Philippines in the first place was already risky.
Yeah.
The political noise will make things a bit riskier.
Right. I can definitely see this being liquidity driven. Do we have a liquidity problem here in the Philippines
So from
with the equities market?
From 2013, the average daily trading volume has just been going down. And it's kind of a vicious cycle where some foreigners, let's say the foreign institutions who are active managers, they're picking, countries and companies to invest in, will decide to sell. So then the market shrinks because they're selling. And then now the passive ones, the ones who aren't necessarily monitoring, so these are passive index funds, since it's a smaller piece of the pie, then they just have to sell some more. So as more and more foreigners sell, less and less people are trading the market. And with less people trading the market, more people want to sell even more. So you get this like vicious cycle where some people are selling and some people see that other people are selling, so they're also selling, and it just keeps going down and down from there.
This is what I've been asking a lot of people, and like I've had some friends that I've had a few friends that were big in equities, and they said you should buy equities. I've done really well in the Philippine stock, and I thought about it. I'm like, I looked at it and I said, some of these big companies, and I look at the PSEI, and it's averaging a price earning ratios around like in the low teens.
Yeah.
Like 12, 13.
Yeah.
Where are you going to get that anywhere in the world? I mean, what's the average PE ratio in the States? I can't remember, between 20 and 30. Yeah. Like, even my real estate investment, at a 5% return, at a 5% net return, that's still a 20 PE ratio.
Yeah. Yeah.
Right? So if you're trading in the low teens, like 12, 13, that's a incredible value. I'm like, why isn't everyone jumping on this? But you're not going to jump on it unless you think the value is going to go up. And the value is not going to go up unless liquidity is driving into this.
Yes.
Unless you have investors' confidence, people see the value, and then it's just like, money's going to be pouring in here. And so you better get in early before that goes up.
The first thing I'd actually look out for is for the foreigners simply to stop selling. Because if you think about it, if you're trying to figure out where is the demand for investment, let's say demand for Philippine stocks, you can track the assets that are being held by these big banks, the BDOs, BPI Metro Bank, that held in trust, that they invest in either fixed income or equities. Their asset books are just growing every year.
Are they shorting the market? I mean, why are they selling? I mean, there's a good reason why they're selling it.
So what they're doing is, if the foreigners have been selling, so some of them would keep some, but a lot of local institutions would rather just stick to fixed income instead of trying to keep the foreigners, or essentially being the other side of the foreigners, just keep selling. So until they see the foreigners stop.
But Enrique, that doesn't make sense. Like in any healthy market, when the valuation drops too low, what do? You buy.
Yeah.
You buy, and then it reverses and it bounces back. So is this a good time to buy?
For me, it is. It's a good time to buy, but only for those who are patient.
Okay.
If you're someone who wants to get a quick return over the next 3-6 months, not for you. I don't think that we're in a position where we can call, though I actually can't say, if it's the actual bottom, but is it low? Is it cheap? Is there value? Definitely a yes.
Yeah.
Is it gonna turn over the next few months? My guess is as good as yours. There's a chance that it's not.
Right. And it's all going to be dependent on liquidity.
Yeah. So
where is that liquidity going to come from? Why is there not enough liquidity from within the country? Because there's not enough retail investors? Or is there not enough institutional investors?
The institutional investors, a lot of them are actually happy with where fixed income is giving returns-wise. So even the larger, for example, insurance companies have a hurdle rate of about 5-6%.
Yeah.
Fixed income, 10-year government bond is already giving you that 5 net of tax. What we're hoping for, or what we're forecasting, is if when that goes down, that's when they'll have no choice but to then allocate some money more into equities. Maybe even just the higher dividend stocks first. Right? But when the fixed income interest rates go down, that's when, for them to still meet the same hurdle rates, they're likely going to be going in to the local stock market. And the retail investors, I would say, usually just kind of follow. Because usually when you talk to retail investors, it's, it's down, so I won't go in. Oh, it's been going up, I'll go in.
Right.
Just to put it very simply.
Yeah, right.
Like when people saw that the crypto market was going up,
Everyone jumps in. It's
Everyone
all
jumps
FOMO,
in.
Yeah, they're usually they're driven by FOMO.
Yeah, usually
Yeah.
when it's at the highest point, usually
Yeah.
the worst point
Right.
to get in.
So then media and news has something to do with that then, right? Like, or is that not enough good news around equities where people are jumping in? Because usually that's what drives a lot of investment, right?
I think what we currently lack in the Philippine stock market is a compelling news story. So you can argue there's fundamentals, but a lot of what gets investors to finally take the bet is there's also a good kind of like emotional tug or emotional story
Yeah.
that they can buy in, believe, and can really bring about lasting change. Currently, it's kind of it's cheap, but like what's gonna be the huge driver?
I've also heard that a lot of people just don't trust the numbers, what's reported, right? I mean, let's be real. We live in a economy where most companies has to have like 2 or 3 books,
Yeah. Unfortunately, yes.
right?
Yeah.
And it's like you have to have a separate book for the BIR. So I've heard. I don't know this, but I've heard.
I've heard the same.
I've heard this. And you have to have a separate book for your shareholders, your stock. You have your audited financials, right? And then maybe one for your, I don't know, maybe you have a separate one for executives, right? So like you're in a system where you don't know if you can trust the numbers, you can trust the books, right? So is there a question of that here?
I think in the Philippines, at least for a lot of these, wealthy families and the ones who've been passing it on generation to generation, I don't think it's that big of an issue. Probably for a few. I'm not saying that all of them are, completely clean, but I would say the broad majority are quite responsible and clean about how they present it. The part where having 2 books becomes an issue is in terms of listing their company or not listing on the stock exchange. So in the Philippines, we're one of the oldest in Asia, but we have one of the fewest in terms of listed stocks on the exchange.
Back up a little bit. I'm trying to understand something. If the BIR is responsible for tax collection, and they have if companies go IPO with 2 separate books, if I'm the BIR, I get a smaller book, and then a company goes public, can't I see that they've lied to me on the financials by seeing what's publicly traded?
So what I'm saying is the ones who are listed, I wouldn't expect a huge deviance anymore by that point.
Okay.
So the difficulty is, since a lot of businesses that are not yet listed have 2 sets of
I
books,
see.
for them to list, they have
need to clean it up.
They need to clean it up, and that could take at least 3 years.
I see.
Of 3 years of clean numbers before they list, so that then the BIR won't get them for it. So that might be one of the deterrents to list. It's because I have 2 books, I have to make it all work.
It's just not worth. Yeah,
maybe
it's
not
going
worth
through
it
that
right
hurdle.
now. Yeah.
So then that could be part of why the PSE isn't growing. Is there's not enough traded companies.
New companies that are coming in also.
Right. That makes sense.
Yeah.
Because it's supply and demand. The more supply, the more demand too.
Yeah.
Right.
And
so
if you have more issues of exciting news stories, that gives more reason for people to come in if they're not in the market right now.
So is the problem coming from the BIR then? So is this the liquidity issue partially driven because of the BIR?
Partially. If it was easy, or if businesses were incentivized, to have a clean set of books, not have to do 2,
Right.
then it's very clear for a family. Let's say I'm a family business and I want my children to inherit my shares. It's so much cheaper if it's listed.
Yeah.
So
Exactly. You avoid the inheritance tax.
but then you don't want to show the world if you have 2 sets of books. So you'd rather not list if that's your current situation.
That's a tough one. Yeah. And I can understand what you mean. Like if the BIR just set up rules and parameters so that you would report honestly. Because I've talked about this on one of my tax videos about real estate. I think that if the business tax rules are anything like the real estate tax rules, I can totally understand because it's completely wonky.
Yeah.
It's like I'm trying to wrap my head around it, and it doesn't make sense. It doesn't encourage me to report, honestly.
Yeah.
And in real estate, you don't want to cheat your taxes, because if you get caught cheating on your taxes, you're not going to be able to move your property, and they can take your property.
Yeah.
Like the government can take your property,
Yeah.
basically. So real estate is not where you want to cheat on your taxes, right?
Mm-hmm.
Let's get back to the whole tax thing. We actually didn't hit that.
Mm-hmm.
That's a very important topic. I looked at real estate investing in here in the Philippines, and if you rent out your property, you have to pay. Not only do you have to pay some sort of income tax, right? You're supposed to pay some sort of income tax. Now, you might be exempt from the train law from it, but when you go and sell the property, you're paying VAT on the entire amount of the property.
Yeah.
So if you only made rental income for 1 year or even a few days on Airbnb, you're forced to pay
12% VAT.
12% VAT
Yeah.
versus 6%
Yeah.
capital gains. And then capital gains isn't really a capital gains tax. So there's two whammies. One is a capital gains tax isn't really based on the net gain or net loss of your property. It's just a transfer tax. It's just a percentage
of the total.
Right.
Yeah.
And then if you rent it out, then you're paying 12%. So it makes real estate investment a really bad choice if you're paying your taxes properly.
Mm-hmm. Yeah.
It really does. And then when I talk to you about what the taxes are in equities, what is it?
It's actually pretty good because you don't have the sense of a capital gain. Like you're not actually taxed on the gain. The only thing you get taxed in is when you sell the stock, you will be charged a stock transaction tax, which used to be 0.6%, but with the new CIMEPA law, capital market, 6%.
Less than 1%.
Yes,
And you don't- and
it's
then
now
you don't pay-
0.1. It's now 0.1.
It's lower
with
now.
the new a law just came out.
So it's only it's almost tax-free income.
Essentially,
Then I don't pay any income tax on it when I
no more.
file my.
Because when you sell the stock, your stock brokerage firm collects that stock transaction tax and pays it to the
It's
BIR
withheld
on
in
your
your
behalf.
That's
And
amazing.
the only other tax you have to pay is when they pay out a dividend, you get charged the 10% dividend tax.
Which is still lower than what I'd be paying
Yeah.
in real estate.
Yeah, lower in real estate, or if let's say you buy a bond, you'll be
Yeah.
charged a 20% withholding tax, or a time deposit, it's a
Right.
20% withholding tax. But for a stock, if you own a stock, 10% dividend tax if it pays any dividends. But if it's a high growth stock that doesn't pay any dividends, you actually don't pay any tax until you sell, and it's just 0.1% of the total value.
Right. To me, that's tax-free money.
Yeah, so it's actually
That's
the
like-
gain, the income, essentially from the increasing
And
price
10% on interest, right? And dividend.
on the dividend, 10%.
What about on interest, on fixed income?
It's 20%.
Oh, it's 20%.
Yeah. So fixed income, like bonds, let's say you bought a government bond, a corporate bond, it's 20% withholding
Then
tax.
why not just go in equities instead of fixed income?
It's if you want the stability of fixed income.
Fixed income, okay. Okay. Yeah, so looking at it, even when I make rental income, I'm supposed to pay income tax.
Yeah.
Right? And I don't know
Yes.
what that might be. Could be about.
There's a bracket.
Yeah, there's
It's
a bracket
complicated.
to it. It's complicated,
Yeah.
right? So I'm looking at it from what you're telling me. It seems like from a tax perspective, equities is the best way to go.
Yes.
More so than, and fixed income is not bad, but it's better in equities.
Mm-hmm. The gains that you get is barely taxed.
That's amazing. I'm game for that. It seems like a better investment.
Yeah. From a tax perspective, yes.
So should I invest, and can I invest in? I mean, because I see the valuation is good.
It's low. Yeah.
The valuation is enticing.
Mhm.
I believe in the growth story of the Philippines,
Mm-hmm.
right? Politics aside, I don't know if I can trust the politics, but I think they're making the right moves.
Mhm.
I believe that this administration is more pro-business.
A bit more business friendly,
Yeah.
yes. That's also the consensus.
And he's got, 4 or 5 more years to go? Something like that.
Half, yeah. 2 years, yeah.
And then from a tax perspective, I feel like it's a better investment than real estate here for me
Mm-hmm.
as a foreigner. Now the question is, can I invest as a foreigner?
So yes, you can. There are a bit stricter rules if you're a U.S. citizen, but you can invest directly in
Because my banks won't even accept me, right? So because I'm a U.S. citizen.
Yeah.
But so, anyways, if I were to work with you, like if I wanted to invest, would I work with someone like you or someone else? Who would I go to?
So it depends what you're looking for. You'd work with us if you want helping with the investments. You want to get in the stock market, in bonds, a diversified portfolio, and we do a lot on the financial planning side. So it's kind of I would say like a 2-in-1 type package deal. So if you're someone who, I want help with my investments, but a big chunk of why I'm looking for a professional is I want to talk to someone about all this money stuff. Like how much do I need to save up for retirement? Can I afford to do this? Can you look at my total portfolio, even excluding this portfolio you have with me? Does it make sense that I have this much of my wealth, let's say in property? Then it makes sense to work with us. If it's purely just, I'll throw money at you, you make a return, I don't need to talk to anyone, that's when you'd rather go for the pure investment houses where they just do investments. So the stock brokerage firms, the banks, they do that.
I tend to invest when I don't know specifics about a company. I don't study a company enough. I don't go in depth with it. I just tend to invest in index funds, right? And with index funds, I can kind of take macro bets, right? So recently, the Israel war with Palestine and Israel started betting in oil and aerospace and military ETFs, right? You can kind of take those overall industry bets. You can take a ETF that's traded on the NASDAQ, for example, or the S&P 500 if you believe in the U.S. economy or if you believe in tech innovation in the U.S. economy. By the way, Hotel 101 traded on the NASDAQ.
And then it crashed.
What do you think about that?
I was initially hopeful because it's the first Philippine company to do it. I mean,
that's huge.
Yeah, it's huge.
No Philippine-owned company has ever been traded in the U.S. stock exchange, let alone the NASDAQ.
Yeah. So it's great news, which was quickly quashed when...
But does Hotel 101 belong on the NASDAQ, though?
I don't know.
I mean, so when you think of NASDAQ, what do you think about?
Yeah, you think about high-tech firms, right?
You think of Google, Tesla, Nvidia,
Facebook,
Amazon.
all these guys,
And then you have...
like a property.
You have a real estate company, a real estate hotel brand from the Philippines on the NASDAQ. That's crazy.
That's great news. But for me, I was just hoping there could have been more to it if there was real appetite, if that really made sense. Because the next day, it just fell. So it's kind of, for me, it was like,
right. So it came out more. I read somewhere the expected valuation was $2.3 billion, and by the time it closed, it was $800 million.
Yeah.
I don't know what it is today.
Yeah.
It might be less than that. I don't know if it recovered. So what do you think that says?
Could be one of two things. Could be they priced it too high. You were too hopeful. Or maybe at this point, not yet.
Right.
Yeah.
Or I think people were skeptical too.
Yeah.
Because they didn't list throughout. They didn't list with the normal IPO process. They listed something
like a
called
backdoor.
Yeah, they used a backdoor method called a SPAC.
Yeah.
Right, and so this became really popular. I think during the COVID time or something like that, right? When there's so much money and there's so much appetite for investment, and so you can go create a IPO. You can create a shell company on the NASDAQ, and just acquire another company.
Yeah.
That was your backdoor way in, and then a lot of times, a lot of these SPACs are looked at with a little bit more scrutiny, and so I think the valuation drops.
Yeah.
Right. But I was thinking about it. I was like, why didn't they list on the Philippine Stock Exchange?
There's a bigger market there. So if I were part of the, let's say, the corporate finance, investor relations, then there's a bigger chance more people want to buy in.
I think it's brilliant. I think what they did was brilliant.
It's-
Their stock prices dropped, but I mean, you think about it, even at 800 million, do you know what the biggest IPO ever on the Philippine Stock Exchange was?
The biggest, I think, was Mondinise.
Yes.
That's
And
the
that was only about what, $1 billion?
Yeah.
The
Yeah.
biggest IPO in Philippine Stock Exchange was $1 billion.
Yeah.
And then, you
And then
know,
you have
Hotel
this.
101 was 800 million.
Yeah.
And then what was Ayala Land?
Now, from IPO is a long time ago. But
Well, yeah, Ayala Land was like something like, I forget, I think it was like 45 million or something like
back
that.
when it listed.
Well, I don't remember what it was, but it was far less than Hotel
Yes.
101. And in fact, Double Dragon listed on the PSC.
Mm-hmm.
And I was researching this. I was like, Double Dragon listed on the PSC for 35 times less than what Hotel 101 did on the NASDAQ.
Yeah.
So what does that say about Philippines? It's almost like they know there's not enough liquidity.
Yeah.
So why would I list on the Philippine Stock Exchange? And you know, I mean, what if they are a really good company?
Mm-hmm.
What if is this good or bad for the Philippines, right? I'm questioning. Okay, this is great that Philippines corporation can go find avenues outside and find more liquidity in the US.
Mm-hmm.
But what does that say about, does that mean all of our best companies are going to go list outside of the Philippines? And what does that say? What's going to happen to the PSE?
It'll definitely be a negative thing for the PSE if more decide to do that. I think it's, if you're being just thinking about yourself, no? If there's a bigger market, there's more demand there, it may make sense to list elsewhere.
Yeah, I think that's where everyone's going to aspire to that, no? Or, I mean, if you're a company, if you're a company here in the Philippines,
And you're looking at
this, why would I invest in the PSE?
Why would I list here? I'll just list outside.
Right.
Yeah.
And even after the initial public offering, you still need to think that valuation needs to grow, right? Are you going to get that growth here in the PSE? Even if you grow in your earnings year after year, is your equity valuation going to reflect that on the PSE?
The past 10 years haven't been great for that.
Right.
If anything now, a lot of the companies are just paying out dividends. More and more, the yields on these stocks, which before on average was closer to 2%.
Right.
Now some are at 4%, some are at 5% dividend yield.
Uh-huh.
So from the businesses, it looks like, okay, if I'm not going to get anything from a business from the increasing valuation, I'll just pay it out.
Right. So I just can't help but think how this affects.
It could, yeah. I think
You
it
know?
would have been a bigger deal if it kept going from there, from the
Right.
IPO price. But if it just tanked 70+% afterwards, that would dent investor confidence in the group
Yeah.
for future listings. Then right now it could just be a fluke.
Right.
But if it succeeded, then I'm sure more companies would be looking at that and saying,
Yeah.
maybe I should list
Right.
outside.
Yeah. I remember when we were building our startup here,
Mm-hmm.
the goal was never to, the goal of every tech startup is to get listed.
Yeah.
But we never think you're going to get listed on the Philippine Stock Exchange. The only one company did it. It was Nixon Leto in
Sure pass.
Surpass. They
Yeah.
did it. I don't know what the outcome. I don't know. I
They
don't know
did
what the
it,
outcome.
but it kind of...
Did it tank after?
It was sad because it was one of those first few like Philippine tech
Yeah.
type IPOs. So there's a lot of hype. A lot of people were really excited about it. But there were a lot of different allegations. I don't have all the specifics of it, but it ended up tanking.
What was the allegation? Was it like financial engineering? What was it like?
Yeah, like it was some of the people who were inside the company were using the company to buy these other companies that they own. So they were kind of siphoning money out of the listed company. So
Right.
so that became a bit of an issue. That's
It was
why
it was a big buzz because it was
Yeah.
like when PSE was announcing their tech sector of the stock
Yeah.
exchange.
that would have been the poster
Right.
child.
That
of
would have
tech.
been because
Yeah.
at the time our aspirations was, you know, do we list on a Hong Kong stock exchange, the Australian stock exchange? If we ever got to that size,
Got it.
we had that big growth story. That was the aspiration,
Yeah.
right?
So that's the reason why now the Philippine Stock Exchange is, I think, pushing really hard to make sure Gcash lists here.
Oh, is Gcash going to list here? That was what I was actually. Thanks for bringing that up. I forgot about that. I wanted to ask you that. Gcash.
So Gcash would be a great listing for the Philippine Stock Exchange.
Undervalued or overvalued?
It could bring in even foreigners to buy. I mean, it's ubiquitous.
It's actually something I'm thinking about.
It's something that's very exciting.
If I were to get into the PSE, that would be the first thing I would buy.
That might. And the reason why I say they're probably working hard towards it is because the current rules state that to list, you have to list at least 20% of your company and you sell that in the market.
Uh-huh.
With Gcash, you're talking about maybe we can lower it a bit just for you.
What do you mean?
Maybe you can bring it 15. So even the president, Armand Monzon of the Philippine Stock Exchange
who owns Gcash, by the way? Who is the
so the Ayalas, the Globe.
Globe owns
Ayalas,
Gcash,
yeah. So for the longest time, Globe has been putting money in Gcash. It's been a loss. It's been over 10 years where that thing doesn't really make any money. And then now that we're finally in that position where they're actually making a lot of money, there's a huge opportunity if they decide to list and kind of possibly bring some life or some liquidity into the Philippine Stock Exchange should they decide to list here.
What do you think is going to happen? Do you think the valuation is going to be overinflated, or because it's on the PSE, they were going to be underinflated? And why wouldn't they list on the NASDAQ? Why would Gcash not go to the NASDAQ after what Hotel 101 did?
They could.
And that's just that's gonna hurt the Philippine Stock Exchange
more. Yeah.
Right.
So
if they lose Gcash, right, dude,
that would really set the tone for future companies to do the same.
Right.
Now, honestly, it would probably be dependent on the guys at Gcash, the guys at Globe, the Ayalas, if they want to ultimately pursue. From what I understand, they're very big on, at least the Ayalas are very big on being Filipino citizens, nation building over here. Well, that's what they say.
I hope so.
But we'll see. But
man, dude, if they went on the NASDAQ, dude, it
would be higher. It would definitely be higher.
If you were them, I just don't think I could do it on the Philippine Stock Exchange, knowing that I can get multiple times more.
Yeah.
On the NASDAQ. And, by the way, Grab's on NASDAQ.
Yeah.
So, I mean, if Grab
it's
can
possible.
do it,
So it would depend on how they want to do it, even with, for example, all of their employees who already have stock. Because some Gcash employees already have stock in the unlisted, Gcash entity. And we'll see. I mean, your guess is as good as mine.
Do you know when this is coming out?
They kept pushing back the timeline. And I think the reason why is...
So for sure they're going on the PSE.
So that's really the goal is really to do that. And they've said it more than once. What's not sure is the timeline of when. I think they're waiting for us a better market because it's difficult to list when no one's bothering with the Philippine stock market and you just get hit by the waves of illiquidity and people selling the market and you just get impacted by that as well. Obviously there are some stocks that still have outperformed, but to list you'd want perfect conditions,
right,
as much as possible to make the most out of the IPO.
Well, they don't need to go I mean, they're owned by Globe and Ayala, so they're going to be fine. So, anyways, this was a great talk, Enrique. I know we're running out of time. Do you want to tell us about if people want to find out more on how to invest in equities? How do they find you, and what type of programs are you offering?
Got it. So the company's called IFE Management. IFE stands for Investing for Everyone. They can follow us on Instagram at IFE. I also have a TikTok, enriquefausto.cfa. And in terms of the programs that we do give, we do help out giving the free content. So if you want to learn about what it is, the specifics of it, you can learn it there. But if you want help with the how, like the implementation, like how much should I really be putting into this?
Yeah.
What are the goals that I want to be aspiring for? How do I aim for those and how do I invest? That's when you can work with us.
Right. Thank you. And you know what, guys? A lot of you guys watching this content and watching our podcast aren't subscribed. So I'd love to ask for your favor and subscribe to our channel. And if you're interested in us doing more finance related topics like this, please comment and let us know. And let us know what you would like to know. So in my next podcast, and maybe I'll have Enrique back, we'll ask him these questions. Please like and subscribe and share with your friends. Thanks a lot, Enrique.
All right. Thanks.